Good afternoon, everyone. Sorry for the delay. Just facing some slight technical difficulties, but we will get started now. First of all, thank you for joining us on this webinar today. Given everything that's going on, with the business environment globally, we felt that it's important to kind of hold a webinar and try to give as much advice as possible to all our community and ecosystem partners and founders. So the way the webinar is going to go is we'll have about 40 to 45 minutes of a discussion with a very interesting panelist. He is a venture capitalist from New York, and he is the managing partner of Modus Capital, Kareem Elsirafy. And once we have that conversation, let's say, wrapped up a little bit in 40 to 45 minutes, we have some interesting topics that we'd like to go through. We will open the floor to Q&A. In the meantime, please do continue to post your questions in the Q&A box, and we will try to get to them as soon as possible along the conversation. So if I could just ask Kareem to jump in and kind of just give an introduction about himself and what Modus does.
Sure, thanks Hisham. Thanks for having me, Hisham, Sally, and the Sheraa team. So as Hisham said, my name is Kareem Elsirafy. I'm the managing partner of Modus Capital, and we are a hybrid VC firm that was born in New York and expanding out into the region, initially based out of Egypt. We have a very interesting, unique investment model where we support entrepreneurs with a full service digital agency. So we don't just deploy capital, but we deploy capital and deploy resources to plug in operational gaps that entrepreneurs and their companies have in their operations. And we do this in a very customized, tailored way by focusing on their top current operational pain points. We invest in companies from the idea stage all the way to later stage, so series A, B rounds, and we have a small SME allocation as well.
Great. And if I'm not mistaken, you started your own ventures a couple of years ago. So if maybe you could just briefly give an idea about what those were, how that journey went for you, just so we can give our attendees a little bit more insight into your experience.
Yeah, absolutely. Modus is actually a startup VC. So we share a lot of the very similar growing pains that other startups encounter. And because we have an operational team as well, again, we encounter some of the same challenges. My first entrepreneurial endeavor was a marketing firm that I started back in 2006. It provided both creative services, helping companies with their digital transformation back in 06, 07, building websites, digital presence, branding, etc. And then had business services such as market research, go-to-market strategies, market penetration strategies, etc. That was my first endeavor. Exited that company when I went to college full-time. And then when I graduated from college, I started a company called unitus.com. It was a network care coordination platform that mobilized health and human resource organizations in geographical networks to help veterans who are transitioning out of the military. So veterans would get out of the military in the US and they would face a lot of challenges, multifaceted challenges, education, healthcare, legal, housing, etc. And they would essentially have to go to all of these independent resources one at a time, kind of regurgitate their information. And what we did is we mobilized these health and human resources and organizations in a network with software where they would dispatch and send files on the different areas of expertise that the veteran needed. And to be able to create essentially a holistic safety net for them. This has since expanded out into the entire health and human service industry in the United States, across multiple states and hundreds of communities.
Okay, fantastic. So I mean, I think it's safe to say that you're the right person to have on this discussion today. I just wanted to jump right into it, start the conversation. Clearly, we're in extraordinary times at the moment. Businesses, individuals, so much happening. And I think a lot of the discussion that's happening at the moment is about what businesses can do and what decisions they need to take. But I just wanted to start the conversation with talking about the people in the businesses, right? Because at the end of the day, it's every startup, every business is a collection, of individuals working together. So I wanted to just start off with leadership and the challenges that leaders are facing at the moment in terms of how to keep their teams motivated and how do they stay focused on the goals. So just wanted to get like your insight on leadership in this crucial time.
Yeah, sure. I mean, first and foremost, you're absolutely right. Like a company is a collective of people working together towards the same goal. People is what makes it, right? It's not just the product or service, it's the people who make the product or service. So these times are super challenging. I think, the leadership is key. Leaders need to be understanding, they need to be empathetic. They need to understand that these individuals they have things beyond their responsibilities at work, they have responsibilities at home, et cetera. And it's really important to take that into consideration when they're thinking about, dealing with a crisis like this. I know one of the big things right now is, companies are trying to manage not laying people off with reduced sales, et cetera. It's not an easy position to be in whatsoever as a leader. I think first and foremost, leaders need to be super transparent, right? They need to, it's okay for a leader to say, hey guys, we're going into a very, very tough time right now. And there's going to be some challenges, and just identifying that, but keeping everybody motivated, I think there's a couple of really good ways that you can do it as a leader. One is, make sure that everybody still has their eye on the prize, right? And if you think about a good way to implement that is little wins, there's a long-term goal and then there's a whole bunch of short-term micro goals that you have to achieve in order to be able to get to that macro goal, right? And if you do that and you focus on these little incremental wins, what you begin to do is you begin to get people feeling like there is progress, that things are getting better, right? That there is achievement, there is movement, there is momentum. So I think, in a time where, things are really difficult or challenging, or even in general, it's good to be able to identify those things, identify those short-term goals, identify when they are successful, and then really, let people know that they are doing a really good job in achieving those goals. Yeah.
Yeah, and I think I completely resonate with what you're saying in terms of I think now is the time to really go into the micro level things, so daily level goals just to keep that morale up, keep that motivation up. But my next question is, like as a CEO or a founder, it's lonely at the top, as they say, right? So how does a leader practice emotional intelligence in this challenging time? Maybe some tips that you could give, or some stuff that you yourself have applied when you were running your startup. Maybe you could share some insights into that.
Sure. I think first and foremost is to make sure that everybody has an outlet, right? As a CEO, and I'll talk about, the lonely at the top concept for a CEO aside, because that's something that every employee can actually do to help and support their leadership team. But, making sure that you have an outlet for everybody on the team. Now, whether that's as a CEO or the senior management team, making sure that they have an open door policy, making sure that they have the ability for any of their teams, anybody on their team to go to them and to be able to articulate a challenge, a frustration, feeling like that they can have a safe place to be able to communicate. That's really, really critical, because what you don't want is, you don't want, you know, your team kind of, you know, building up anxiety, frustrations, challenges, whether it's at, you know, personal or work, and then having that kind of have a, you know, an explosion at work, or a breakdown, you know. So as long as the team feels like there is a conduit for communication and the ability to communicate, I think that is probably the most valuable thing. Now, again, whether you structure your organization in a way where you have your senior management team, which is good for them, you know, to be able to communicate with people, them having an open door policy, they regularly have, you know, time slots where they just check in with their employees, 10, 15 minutes each. They can do it once a week, once every other week, or however their schedule permits. Or the senior leadership team as well, like the executive team as well. That's one really good way to do it. The other value added as a leader is it helps you keep your finger on the pulse of what's actually happening in your company, right? You know, the senior management, they don't have the time to, you know, or the resources, unfortunately, to be able to know everything that's going on at any single point. But so what they actually do is they actually rely on their team as the front soldiers, you know, kind of fighting the day-to-day battles, to be able to relay that information to them. And then the senior management team can then relay that to the executive team, for example, if your organization is that big. So there's a value added to it of just from a standard business operations and intra-org communications in itself. The other thing that you can do is your HR team, you know, your human resources, whether it's a person or a small team, or whoever is playing that function, they can actually play that type of a role. You know, they can, if it's not management, and if it's something that's maybe a little bit more on the personal side, that's something that can be a conduit, or a sounding board for the team. The last thing is mentors, right? Being able to put together a structure where people on your team, as part of their professional development, and also as an outlet, are paired up with mentors, whether it's somebody that is part of the business network, or whether it's just a task that you give all of your employees. Say, hey, you know what? Like, as part of your OKRs this month, we want you to go, we want you to find somebody that you look up to on LinkedIn, somebody in your industry, or somebody that's motivating for you guys. And we want you to reach out to that individual and see if they have, you know, 1 hour a month to be a sounding board for you, or a mentor. So I think these are three options that are available, that companies can actually implement for their teams.
Interesting. So I think, like, the key takeaway is, even through this troubling time, maintaining transparency from top to bottom is a key thing that leaders need to do, and how they structure that flow of communication can vary. You know, you gave like a couple of options here, but one thing that certainly this whole situation that we find ourselves in presents itself is a lot of people are just not in a single place. They're not in an office together. They're working from home. So, and that certainly adds a little bit of a challenge. So maybe you could give some examples that you yourself are implementing with your team at Modus, or the portfolio companies you work with, in terms of keeping that, team spirit going, keeping that communication open, even if you're not in the same place.
Yeah, no, absolutely. So what we actually do within our companies, you actually have something like physical, right? That is a reference point to everybody, that they see either directly, or they see it in passing, right? So what we have at Modus, for example, at our offices, we have a big chalkboard wall, says Modus in the middle, and then we have all of our portfolio companies listed around it, all of their logos. And what that does is, every day when you walk in, you come in and you know that everything you're doing operationally is supporting these companies, the founders, the teams, and supporting them in supporting their customers, right? So having something physical like that is great when you're in the office. Now that everybody's, this work from home and remote work type situation, you can still implement that same concept, right? If you have core values, print them out on a piece of paper, tape them like right above the wall on where your laptop is working or somewhere where you see it, right? If you have something else that is inspiring or motivating for you, something that is going to keep you in good spirits, but something that's like physical, that's tangible, that's actually there, that you can see again in passing in the back of your mind or directly, that continues to kind of like keep you motivated, keep you essentially your eye on the prize, understanding what it is that you're working for. So that's one thing. Another thing I think that we've been seeing a lot of portfolio companies do is actually have required routines. So for example, they say you have to, at least 2 days a week, you have to get out of your pajamas, right? You can't just work from your pajamas every single day because you become like lethargic and you get lazy, and it's easy to easy to get into that type of a routine. So, or they say, do a 20-minute yoga session or try some new physical activity like in home, and they share, workout routines or something like that. But it's not just discussing that, but then what they do is they incorporate it into like their daily stand-up, right? They take 5 or 10 minutes out of their daily stand-up and they say, hey, like, what new workout did you guys try today? Or what new thing did you guys do today, right? That's kind of like keeping you guys motivated, or hey, we all talked and discussed that we were going to do this one thing, how did it go for everybody? How did it work? And then it continues to engage on not just the work front, but more in that like social rapport and interaction that you normally have in an office when you're sitting next to somebody or you're passing somebody by the water cooler or during a coffee break, that you're not able to have, digitally, because you're not there.
Yeah, no, I agree. And I think, one of the things that teams can do, and like even we are doing this as an organization, is acknowledging that, this is something different, and, this isn't not everyone is used to working from home, and kind of the challenges that presents, certainly, like you said, it's great to be in your pajamas, and working as well, but then it also kind of puts you in that little bit of a relaxed mind frame. So it's important to I think, and I think we keep coming back to that same topic of transparency and keeping an open line of communication, is acknowledging that yes, a lot of people will have their families at home, and there might be some hustle and bustle going on calls and things like that. So kind of not letting things get to you as a team, and just supporting one another. And that kind of brings me to the second part of the support aspect. So we've been talking about team and internal support, but as an entrepreneurial ecosystem, how can different entities or different players in the ecosystem, and I mean this in a very broad sense, like it could be incubators, accelerators, government entities, investors. How do you see kind of them supporting, the founders during this time, and startups during this time? Like, do you see their roles evolving into more, let's say, personalized relationships rather than just very functional relationships, or do you see things, maintaining as they are?
Yeah, so it's a great question. It's a great point. And it'll bring us back to that lonely at the top concept, right? So first and foremost is investor-investee relationships are inherently personal, right? Like a lot of investors invest in founders because they believe in them, they trust in them, and there's always a rapport and a strong relationship there. So again, that's inherent, and investors supporting founders is definitely, is definitely necessary. Now, the lonely at the top concept, right? As a CEO, everybody in the company, whether it's 3 or 4 of your people that you're employing, or whether it's 20 or 50 or 100, right? Everything goes upstream, right? And it goes upstream to the CEO, and he's ultimately the one that's held responsible. And the CEO doesn't have anybody above him to point a finger or to rely on, right? The buck kind of stops with that individual, him or her. And that's a really, really tough position to be in. And that's where that whole notion of, lonely at the top comes from, because you're the only person at the top. So I think there's a couple of ways to support CEOs. One is the team downstream should be very supportive and understanding. And, you know, as long as the CTO is again, communicating, I think that's critical, and it'll make them feel comfortable, et cetera, but they can reciprocate that. As far as, you know, the ecosystem, it's in the MENA region, it's a very small ecosystem. And I think that investors, you know, and institutions do need to be a little bit more supportive. You know, again, they're all relationship based. If they provide as investors, as mentors to founders, provide an outlet for the founder to discuss, right? And they can tackle much more difficult problems. A lot of VCs and investors have businesses of their own or had businesses of their own, and can really help founders with things like, you know, cash flow management, you know, managing personnel, et cetera. So there is most certainly a role for the bigger players, institutions, and investors in the ecosystem to support these founders. And they can do it simple ways. They can have it by having, you know, check-ins. They can be creative by thinking about how other portfolio companies or that are in their portfolio or other companies that they know can provide like a complementary service that can help the company with something they're struggling with. So if you are, if you provide a physical product and you have your investor has in his portfolio a last mile delivery company, right? Being able to help think out of the box and partner with them to be able to do more fulfillment, or any type of operational support that is synergistic that way is something that's valuable. The other thing I think from institutional level is, you know, again, I think just really listening and understanding and just getting resourceful. You know, first and foremost, listen to see what it is that that founder, that CEO needs. What are their pains? And if it's just helping them think through it, you know, maybe that's all they need. If it's mobilizing resources, leveraging your network to be able to help, you know, that can really go a long way. So those are a couple of different methods I think that the greater ecosystem can kind of support from the top down, and the employees from the bottom up as well.
So I think it's safe to say then it's not just the responsibility of let's say the CEOs or the founders, but in this time of you know, extraordinary challenges, I think everyone collectively that is associated with the ecosystem needs to step up and kind of just support in whatever way they can. And I think that kind of, you know, ties in everything together with this segment is that whether it's in your internal team, whether it's your investors, your board members, mentors, whatever it is, I think the magnitude of the support that is being offered is not what's important. It doesn't have to be, you know, like a $1 million check, for example, from investors, but it could just be something as simple as making a connection to a relevant supplier, or you know, promoting portfolio companies on social media, or making the connects to customers that could really make the difference between surviving this crisis. And that kind of makes me want to shift a little bit now and switch gears into more in the business operations side of things. So now, you know, let's talk about the machine itself, and kind of how we can potentially look at optimizing things. So what changes do you think, just very broadly to begin with, do you see happening from the operational side of things for startups?
Yeah, absolutely. So, you know, I think there's, you know, I always have this kind of perspective that whenever the markets get tight and there's a cash crunch in the market, on like a downward investment cycle, I think I like to see that, because what it does, it forces entrepreneurs and founders to really be innovative, right? And to get super, super lean and to get really creative. Now, this is a unprecedented situation, and it's to an absolute extreme. So I obviously don't wish this type of situation on anybody, or any environment, but it's the reality of what we're in. So, you know, I think it gives you a good opportunity to take a step back, look at the macro picture, right, of all of your intra-org operations, and identify where there are inefficiencies, right? You know, if you see that there's an opportunity to trim the fat on, you know, some of extra processes, right? If you have, for example, if you're buried in meetings, right, and you take a step back and you say, we can get more output that will help us push more product to customers to increase sales if we just get rid of, a couple of meetings a week, that's a really, really big efficiency. I'll give you guys like a really, really simple example. There was like a study done, I don't know which consulting firm did it for Disneyland, and they said that if every individual uses 2 sheets, like little tiny squares less of toilet paper that visits Disney, that they would save, I think it was like an astronomical number. It was, I think, in like the hundreds of millions of dollars a year, right? So it's, not that you can really control something like that, but just again, as a concept, right? So I think that's definitely one thing that it gives you an opportunity to do. Again, take a step back, take a look at the bigger picture, which is really tough to do when you're just like, in the day-to-day grind, in that operations day-to-day. It's hard for you to step out and look at the macro picture, but this is kind of forcing everybody to do that. So whether it's a necessity or not, it's a good opportunity just to do it and see where you can kind of restructure.
Definitely, and that's a great example. I mean, obviously, it's very difficult to control, activities of your customers or things like that. But it just goes to show how such a small change can, make such a big difference in the bottom line. I want to touch on, a little bit, and I'd like your take on this. Like, does it make sense from a business operations perspective to focus on just your core revenue generating activities, at the moment, because a lot of the times, startups, to scale rapidly and, to grow, they tend to dip into a little bit of, activities that, let's say, are not related to their core product or core offering. So do you think it's wise for founders to be in that mindset where, listen, if it's not bringing $1 into our business, then it's worth suspending, these activities? Obviously, it depends. I'm probably generalizing here a little bit at how easy that would be. But do you think that mindset would be useful to have at this point in time?
I think so. I mean, I think looking at the core of your business is always the right first step, right? Understand it, look at it, see how far you can push it, see if it's working well. If it's a really, really well-oiled machine, that's great. If it's covering your costs, that's great. And then from there, if you do want to, focus on something else, or you do want to focus on additional revenue streams, because, as a byproduct of this current status, there's an opportunity for you with the resources you have to bring in another revenue stream, then absolutely do it, but do it in a structured way, right? Like, codify a framework that says it's going to be X amount of budget and X amount of time, and we're going to test this over the course of 2 weeks, and then we're going to have like a go, no go, like line in the sand. If we get to this point, then that's enough validation for us to say we're going to continue doing it. If not, we're just going to back off and maybe try the second or third thing. Some companies don't have that luxury, right? Some companies, their core business is actually affected significantly by the change in the current ecosystem. So from them, they don't really have a choice. They have to innovate. Look at your core business and think of it like the layers of an onion. Okay, if what you were providing is the absolute center layer and that's not working anymore, then go like one layer out. What is the smallest pivot that you could do with your existing product, service, infrastructure, team, employees, right? That is outside of the core business, right? See if that would work, see if that gets traction, and then continue, going layer by layer by layer until you find something that sticks. But again, the best thing that you can do is make sure that you're controlling for variables, right? You've got to do it methodically. There's got to be a framework. You've got to have parameters. You've got to have limitations, because it's very easy to just go and get lost in the weeds, on scope creep, and then, just dig into a very, very deep into something that, like testing an early product hasn't been validated, right? So you want to be, especially in this type of a time, because I'm sure you have limited cash, limited time, limited resources. So you need to really be like surgically efficient about your operations that way.
Definitely. And yeah, I think this is sound, advice that, um, for lack of a better word, for trying to control the situation a little bit too much as a team, you might try to end up doing too many things at the same time, and you're not giving enough time to each action that you're doing and testing those results. So we still, I think, need to keep that iterative mindset going. And certainly, I think this is a good way to segment that. If your core business, or your core offering has directly been affected by this, then you have no choice but to look at, some other revenue streams, like you mentioned. But if your core product or offering is not, substantially, I would say, I think in some shape or form, every core offering is being affected. But I think, and so I just want to bring like a little like interesting idea that popped into my mind the other day, about how potentially to go about this is. Does it make sense, or do you see like applying customer personas at this point in time, and kind of seeing broadly in your market what customers have been affected by what's going on and what customers haven't, and then maybe potentially micro pivoting if that's not your target demographic, doing like a little bit of a micro pivot to capture that audience a little bit for the time being? Or do you not see that as fruitful exercise?
No, I think absolutely. I mean, I think there's two things that are going to happen to your customers, right? And to your point, I think it's absolutely necessary to do the persona exercise, because what you're going to need to do is you're going to identify that some of the personas of your current customers, they might be extremely price sensitive, right? And if their personal lives are being affected because they don't have they're uncertain about their income, for example, of which we have a couple of portfolio companies that provide a service like that. Again, they're going to be very, very price sensitive, and they may not be a customer. They may be suspended short-term, long-term, you really don't know. So you need to be able to identify that so you can forecast, okay, what percentage of my customer base and in turn my revenue is going to be affected. And the way to do that is to do the persona exercise. And then to your latter point, then look at the personas that would not be affected by this, right? When you're doing personas and you're looking at the attributes of your customers, are they in service-based jobs? A personal trainer is somebody who's very different and affected by this than somebody who works as like an aerospace engineer, for a bigger firm. People who have those types of jobs are, personal trainers they're not even allowed to go to gyms because the gyms are closed practically all over the world, So I think it is absolutely important to do that. I think first and foremost, focus on your existing personas or your existing clients and their personas that are stable, right? Think about how to focus more on them. And then, go through an iterative process of, again, testing additional personas, for your product or service, seeing what pliability or flexibility your product or service has in which it can, for a small pivot, be able to accommodate to a new persona, right? And this is exactly what you would do in a growth strategy, right? If you're trying to expand your market presence or get entry to a new market, this is exactly what you're going to do. You're going to say, we've got these personas now. Here's our backlog of additional personas that we've wanted to tackle. Let's tackle them one by one by doing a cost benefit analysis. What's the cost to pivot the product? What's the benefit? Because what does this persona market look like? And then find the one with the highest ROI and then tackle them one by one.
Yeah, definitely. It just kind of coming back to the topic that you added about innovation. We certainly hear this term a lot, innovation, and there's different contexts that's in. So in this case, do you see like businesses looking at certain technologies and adopting them as a useful exercise, or Because, you know, the tendency right now, for example, is working from home. Let's get on Zoom, for example, and let's get like a yearly subscription for, whatever X amount of dollars, which you may or may not end up using so much once the situation, normalizes. So how do you see, businesses approaching the lure, I would say, to technology and just integrating things into their current business processes? Like, how can they be a little bit mindful there?
Yeah, I mean, again, and this is about that bird's eye view that I talked about in the beginning, right? Take a step back, look at the macro picture, look at your people, look at who you have, what their function is, look at your process, how are they currently engaging, what does the workflow look like? And then lastly, look at your tools, right? People, process, tools. What tools were they using, And I don't mean just technical tools. If the tools they were using was a back conference room, 3 times a day, then you need to replace that tool with a digital tool, for example, right? A Zoom or a BlueJeans or the Skype and like. But mapping it out, I think, is the best way to do it. And it's part of that getting lean exercise, right? And really innovating your intra-org operations and saying, we're finding inefficiencies that we were doing, but we were so busy executing that we didn't identify them, right? And some of the things may be good for a temporary fix. Some things may be good for long term. I don't know what percentage of companies are going to have a full work from home policy and like never need to come into the office again. Probably a very, very small percentage of them, but nonetheless, this experience has been an extremely big disruptor. And I guarantee you that every company going back to work when things normalize, inshallah, is going to be, they're going to have a much more significant virtual remote work policy implemented at their organization. So it'll most probably be a hybrid. I don't think any of the things that they're doing right now will be completely discarded. Maybe some things that are super short-term are, but I think that might be more on like the business side, like lines of credit, for example, to help with cash flow. But when you're talking about tools, again, you're really just extracting and squeezing more efficiency out of your existing operations. And it's most likely going to have a home at your organization for the long term.
Definitely. And I just wanted to, from a business operations perspective, just quickly touch on something that you already mentioned before we get into, I would say, the meat of the conversation, which is financial management, because I think that's at the forefront of everyone's mind. But in terms of exploring partnerships with complementary services or companies, do you think it's an approach could be a proactive approach could be taken rather than a reactive approach? That listen, this is the service we're offering, and we're actively calling out other businesses to come and leverage what we have, so we can leverage their resources, or do you think it might be a little bit distracting to do at the moment to take this approach?
No, I think it's definitely a good way to do it proactively. I think what we're seeing right now is an initial crunch, and everybody's like putting out fires and in a reactive mode. So they probably don't have the brain power or capacity or time to be thinking that way, right? They're probably just got like a big checklist of things they have to do that are like prio one. And then I think when they get through that, and as companies get through that, then they can begin looking at that. But I think a proactive approach is definitely the way to do it, right? Some companies have already been doing it now as a consequence of need. So companies, for example, service company in Egypt is using a last mile delivery company partnering up because they can't handle the influx of orders, right? Because everything now is being delivered to their home. So, there's that. But I think, again, a proactive approach, we will probably see it. I do recommend it, but you'll probably see it more as things settle down. Because ultimately, and this goes for the whole, concept we were talking about earlier, as far as like supporting founders, the sum is greater than all the individual parts, and what's unique about this is this situation is that there's an opportunity for people to not be so inward looking and think more about collaboration and support and mobilizing for collaboration. And I definitely think that that's the right call. I think it's the right move across the industry, from investors to founders to team members amongst themselves, from businesses to businesses. I think it's, you know, you only have to engage with what makes sense for your business and what provides a good mutual value added. You know, exploring it doesn't cost you too much.
Yeah, definitely. And just to add to you know, this concept that we've been talking about of support, or trying to find complementary you know, services that you can partner with. We as Sheraa, we started you know, a community Slack channel, and we'll post the link in the chat in a little bit. But the whole idea behind that is to basically try and get as many people from the ecosystem in one place, and kickstart that conversation, you know, and let everyone just kind of find whatever they need to find. Because I think a lot of the challenge right now is that because everyone is so focused and there's so much going on, that no one is just getting the time to have these conversations. So please, I would definitely encourage, you know, all of our attendees to join that Slack channel and leverage that as much as possible. And in terms of the conversation, I think it's a good time to dive into the third topic, I would say, of today, which is financial management. You know, this is a big question mark. This is what is stressing founders out right now. You know, I just want to take the conversation internal and move it outwards. So what suggestions or what advice would you give, you know, businesses when it comes to simple things as, you know, their payables or their receivables, and how they can kind of work on these internal things to manage their cash flows?
Absolutely. You know, cash is king, especially for small businesses, startups, early stage companies. Some early stage companies are, you know, they're fairly well funded and they have a runway, but, you know, if their receivables or their revenue is impacted, that significantly shortens their runway. So it's affecting everybody, some to more extreme measures than the others. Some things that can be done. So on your payables, for example, talk to your vendors, right? Look at what your existing payment terms are. Reach out to your vendors in a cautious way, I would say, and see what terms can you get. If you're on like net 30 terms, but you may be able to get net 60 or 90 terms on your payables, that would be significantly helpful to your business, right? You're kicking it down the road a little bit. You're giving yourself an opportunity, getting some breathing room. But what you want to do is, you also, why I said cautiously, is you want to remember that business, right, it probably also is facing challenges. It may or may not be facing challenges, but you have to be considerate of that. You don't want to burn bridges with any of your vendors, right? You don't want to damage that relationship. So I think from the beginning, you know, from the start, look at them, look at the terms that you have, look at what's core to your business, what's absolutely essential, and talk to them first, right? Talk to those vendors first. See what type of payment terms you can get. And again, be empathetic. Say, do you guys have the ability to do this? You know, is this something that you think you can do? So that would be the first one. Second one is on the receivables, right? So we talked about the personas, right? And understanding which personas, which customer segments that you have that may not be affected. If you are on a, you know, product or service subscription for individuals, see which ones target which personas that you think are going to be stable, right? Make sure that you communicate with them. And again, be open and transparent. Say, we would really like to make sure that you guys are happy with the product or service. We want to make sure that you guys are, you know, going to stay in and continue. Tell them how much it means to the company. It's very supportive of us that you guys are continuing maintaining your relationships. So again, see which ones are not that affected and focus on them first. The other thing that you can do is on your receivables, you can get creative, right? Like you can, if you have like a subscription model, for example, you can front load a lot of your services to help you with this cash crunch. So go to some of your customers and offer an incentive on paying for a subscription an entire year upfront instead of paying month by month, right? It might get you, a boost in your revenue short term that'll help you through this cash crunch, right, in the next couple of months. But you just got to be cautious on if it's a product or service that requires heavy fulfillment. You want to make sure that you're able to give that fulfillment on the backside. Couple other things, there's debt financing options, but you have to be really careful on that. You never want as a founder to take on personal debt for the business. Definitely recommend against doing that. But if there is an opportunity to get debt financing or lines of credit, make sure that you have them, right? The other thing is if you are a business and you actually have them, they may not be available. Several credit card companies, several lines of credit, what they do is they evaluate businesses on their cash flow on a month-by-month basis. And you might have $100,000 line of credit that you were expecting to be there in perpetuity or continue to go up, but the bank has, they do risk assessment and they may say, okay, we see a significant drop in your revenues, so we're going to cut that line of credit down. So make sure that you're able to secure your own financing as well. The other thing for investors, if you're getting tranches of funding from investors, reach out to your investors. Say, we know investors are people too. They have money, they have cash flow challenges. They may be an angel investor, may be financing an investment in your company based off of market performance in a completely different portfolio, which may have taken a massive hit. So communicate with your investors and make sure you say, hey, are we still good for this next round? I just want to be sure that, and again, make sure that you're empathetic, understanding that it is a hard time for everyone. I'll pause there and see if you have any questions before maybe chatting about a couple more.
Yeah, no, I mean, I think like for me, I think it comes back to the same kind of point that we've been probably, going through the whole theme is you're still going to be dealing with people and individuals. So, be empathetic as much as possible, acknowledge that these are extraordinary times and then try to find, the best way, through this, especially when it comes to the money side of things. Some interesting points you made about, the receivable side of things, if it's like subscription, front load them, things like that. I think I will just echo and reiterate what you said about debt financing, that, in this frame of mind of, to sustain the business, founders may think that it's wise to take on personal debt to, keep, pumping cash into the business. And I think that just wouldn't be a wise decision to make at the moment. But kind of just coming back to the point you made about existing investors, right? So if you already have people on your cap table, what do you think is the key there to leverage, as much as possible, the cash flow coming from that existing network? And certainly, they also are accountable and they also have, limited partners and investors that they are answerable to. But it's, the quickest source of new cash into the business. So what are some of the tips that you yourself as an investor would be looking for from your portfolio companies?
It's really just communication, right? We know that this is a hard time. We know that there's a lot of things that, capacity, team, finances didn't plan for, and everything's kind of amuck. The best thing that you can do to communicate with your investors or engage with your investors is let them know that you're on it. Let them know you're thinking about it. Let them know, to the extent that you have a plan, what that plan is, right? And what this does is, if there's an opportunity and you share your plan with your investors and they see an opportunity to be helpful, again, capital, network, any sort of other connections or other value added that they can provide, they will be able to identify that and help them. Because again, from their perspective, it's rapid fire as well. You have a portfolio of 20 early stage companies, half of them can die just in the matter of 2 months or 1 quarter because of this. So they want to be able to support and protect. The best thing to do, again, is to just communicate, like, have a plan. It doesn't have to be fully fleshed out, but have something, just let them know that you're on it and engage with them and keep that open, transparent communication. I think that's really the best thing that you can do.
Yeah, definitely, I agree. And I think kind of, like the previous section that we talked about in terms of business operations and even on the team side of things, I think, some of the tips that we talked about would help in you as a founder or a leader coming up with this plan that you should be communicating to investors, because certainly I don't think, and like it's just my take on it, that from an investor lens, if you have 50 companies in your portfolio and maybe only 10 of them are coming to you with a plan and the rest 40 are reaching out for just more capital, I don't think that I would be as inclined to support the other 40 as I would these 10, because there I have something tangible. Even if it, like you said, it's not fully fleshed out, I still see the thought process. So it probably increases a little bit more confidence that I have in that team. Because I mean, and please, like, correct me if I'm wrong here, but even for investors, it sort of becomes a little bit prioritization exercise, just like how startups are going to optimize their business operations, so would VCs in this kind of a climate, right? Or do you not see that changing in a couple of weeks ahead?
Yeah, absolutely. And it is critical. I mean, to your point, would an investor give you money without a plan in the first place? So why would he give you money, if you're in the situation and you're asking for more capital? You absolutely have to have a plan. So yeah, 100%.
Great. Any other tips? Because I just have one more segment that I want to touch on before we jump into the Q&A. We're getting a lot of questions from the attendees. So do you have any tips for founders or startups that are beginning their fundraising journey right now? Because we all know it takes 6 months, 9 months, the timeline, whatever, all of that is there. And the initial plan was probably, okay, I need funds by the end of this year because things were fine. So they're starting their conversations now, but suddenly there is an accelerated time frame. There is an event that has caused just a change in the dynamic. So how do you see those startups or founders approaching investors at this point? Do you see them maybe going through existing founders and reaching out to their investors, or just starting fresh? Maybe a little insights on that aspect.
Yeah, I mean, I think, understand the investor's context, right? They're probably managing their existing portfolio companies, but they still have a mandate to invest, and they're still opportunistic, So I know investors are currently still looking for, what companies or what innovations can come out of this existing crisis that can provide a product, service, some sort of value added, and is a good investment opportunity. So they are definitely still looking. I would continue with what your original plan is, traditionally networking for investment from other founders, angel networks, existing investors and their networks is definitely the way to go. But just keep in mind that, there's, that the investors are also dealing with something as well. And to that point, just do your research, right? To take the time to know and understand from the investor's website, from other founders that they've invested in, from their portfolio construction, if there is a good fit for you. You don't want to go to an investor with an idea or a product that is too overlapping with something that's already in their portfolio, right? Or something that's completely outside of the industry that they're in. So
yeah. Great. That's some solid suggestions in terms of how to approach investors. So I just want to kind of wrap up the conversation with probably a very important, topic when it comes to cash flow management, and that's, your internal expenses. As a founder, as a leader, you're looking at, your income statement, your cash flow statement, and you're wondering, okay, what can I do at this point in time to, make that dollar last as long as possible. So, just want to get your insights on that. Certainly, I think it's an important exercise to do. But how would you approach that? Because certainly it is challenging. Making those tough decisions. So how would you approach that challenge?
Yeah, so I think the first thing you do is, like, in that whole quote unquote trimming the fat kind of exercise, is like, look at your variable costs, right? Revisit them, right? It's quicker to adjust variable costs than fixed costs. If you've got to pay rent, right, you're not going to be able to move out to somewhere cheaper fairly quickly or easily, right? So look at your variable costs, things like travel expenses, consider a hiring freeze. Look at your discretionary spending. For example, if you have a petty cash budget and you guys do, team lunches, once a month, or you have an allocation for, office snack supplies, things that you're no longer going to be needing, look at those and kind of cut them down or cut them out, and incorporate that cash and reallocate it to somewhere where it's going to be, where you need it, employee salaries or the like. Any ancillary programs that companies have, again, I would think would fall into that discretionary spending category. Something that is not absolutely necessary that you may be able to kill, I would definitely consider putting those things on pause. The other thing is redistributing any outside work to your core team, your core workforce, right? So if you're outsourcing your PR, for example, or some content writing, see if you can not outsource that. You can take those tasks and redistribute them to your internal team. It may mean that, if somebody had a 25 or 30-minute commute to and from work, that's an extra hour that an individual doesn't have to commute to work, and that's an extra hour that individual can help lift on something else instead of outsourcing it and paying for it. So I think for variable costs, that's definitely one good approach. A second one is switching fixed costs to variable costs, right? So I'll give a super simple example. If you are, if you own equipment, for example, let's just say employee laptops, right? You may be better off, selling your fixed cost equipment and financing them, right? So you would bring in some cash, taking in, the cash for selling the actual items, and then from there being able to go into like a leasing arrangement, which gets you some early cash. So selling assets and then leasing them back is a good strategy. Probably not feasible for every business, but to the businesses that can do that, I think that's a good strategy. And the other thing is, if you have business insurance, look at it, read your policy, contact your broker if you have a broker, and see if you have business interruption coverage. A lot of business insurances do have that. Great lesson learned, although the rates are probably going to go up quite a bit, but great lesson learned to be able to get business interruption insurance. They cover things like this, right? They have a dollar value that they cover in the case of tragedy, fire, anything like that. So if you do have it, look at it, see if there's something that you can get out of it. Aside from, government programs, all the programs that the banks are putting in place, like deferred payments, et cetera. But yeah, check out your business interruption insurance if you have it. And if you don't, definitely something to consider in the future.
Great. Some interesting tips over there in terms of managing your cash flows. I'm just gonna jump into like some of the questions that came in, in the Q&A because they're kind of relevant to cash flow management that we're having. One question is, like if you're in the stage of building your product at the moment, should you wait or should you continue? I mean, like how do you see that challenge? Like, how do you approach that decision?
I think you just kind of have to look at your runway. You have to look at your go-to market strategy. If you assess your go-to market strategy and you think that you can still enter into the market and that will be able to generate revenues, for example, that will help cover costs, then just do the modeling and continue pushing forward. If you're building and you have equity financing from investors and you have a runway, and you want to capture this time, it might be good to continue building, because this might help your first mover advantage, right? You're not losing, other companies may be on pause, and this might be a good way to be able to catch up. So I think it really depends on the context, but take a step back, look at the macro picture, look at, again, from a market entry perspective, is it feasible? But primarily, like, cash is king. That's what everybody's looking at right now. So do a solid cost benefit analysis on that.
Okay, great. And secondly, I have a couple of questions here, and not I would say the easiest subject to talk about, but it certainly is a big one when it comes to cash management. Is laying off the team that you have? Do you keep them? Like, is it the right thing to do? Maybe what are some ways to not be so, I would say, like, rigid about it, like, that this is a decision that we have to make. Are there some ways that founders can approach this challenge of employees and headcount and salaries, because obviously at the end of the day they are still people, so how can founders still potentially support them and their team financially, but then also maybe cut down on the strain that's putting on their cash flows?
Yeah, it's a really great question. Probably the hardest thing everybody's dealing with, and it's the question that I probably get asked the most. I'll start with, like, transparency and communication. Communicate to your team that it's a hard time. Ask people, on your team, be like, everybody has a different personal financial situation, right? You might have a developer who's a bachelor living with a roommate, and he's just got a nice savings and, likes to, I don't know, buy Apple Watches and the newest gear. And maybe that individual can volunteer, for example, to say, what, I'm in a position where I'm happy to volunteer, 30 days, 45 days, 60, whatever's within their capabilities, to keep one of their colleagues paid, somebody who has a family, right? Who doesn't have that runway. So I think, communicating, giving people an opportunity to come to you proactively and say, hey, I'm in this situation and I can help, and this is how I can contribute. Again, the sum is greater than all the individual parts. I think founders will be very, very surprised at what their team is able to come and do for the company, for one another. So I think that's one thing you can do. The second thing is you can just ask people, hey, you guys live this startup life, right? Talking about these early stage companies. Hey, we've been talking about how to get lean at work, get lean at home, look at your subscriptions, look at your discretionary income, look at all of the things, maybe you should just start ironing your shirts instead of sending them out to dry clean. Although I don't think you're going to need to iron shirts anyway, because most people are working in their pajamas.
Well, you never know when you need to switch on your video, right? So
exactly.
have to have a suit ready to go.
Yeah, have one on standby.
Yeah.
Simple things like that. If you ever get a chance, or if you haven't read, Ben Horowitz, one of the founders of Andreessen Horowitz, has a book called The Hard Thing About Hard Things, and he was in a position like that. He, in his book, his company was going under. And what he did is he said, we've got 8 months of runway, and we're going to have to rebuild our product from the ground up. And it's going to take us 4 months. and he just put all his entire team in a big room and said, look, guys, this is what we have to do. I'm being open and transparent. You know, who has the ability to continue for no pay for the next 4 months to get it on the ground, and who doesn't? And some people, as a function of need, right, couldn't, and they couldn't continue, but about 80% of his company could, you know, and that comes from A, commitment to the company, B, confidence in the leadership, which is why it's so important for leaders to be there for their team, to give them an outlet to communicate, right? To have an open door policy and make them feel safe. Because when things are good, it's easy. When things are tough is when like true colors show, you know? So again, I think it's that type of communication, you know? And ultimately, you know, I think individuals who are on the other side of it, they need to understand that it's bigger than one person, right? The company's bigger than one person. Sometimes people have to get laid off, but if the boat's sinking, you know, and you need to throw, you know, some extra weight off so that it stays afloat, sometimes people need to understand that it's better for, you know, 8 people to maintain their jobs than for 20 people to be completely out of work, you know? And hopefully as this passes, there will obviously be an opportunity for them to be able to come back and secure a job in the future.
Definitely, yeah. And I think I just want to like touch on something like that I was reading in the news the other day, actually. It's about, you know, kind of reskilling, you know, or shifting the workforce that you have in your business to perhaps some you know, other verticals within your business, or maybe, you know, outsourcing your team to a business that, you know, has the ability to, let's say, maintain those, even partially the, you know, the salaries of your team, and kind of just letting them work, you know, on the side a little bit to support that secondary business. Because certainly, you know, and this is not just a startup challenge. I mean, this is like, you know, a broader macro issue at the moment, where, you know, malls are you know, they're not operational. You know, only essential items are opening. So how do you deal with that? And I was reading that, you know, this is some of the techniques that, you know, the bigger companies are adopting, where they don't want to lay off their workforce. Certainly it's a challenging time. So they're kind of reskilling them, or in that respect, where even if you don't necessarily know something about a particular topic, if there is a need for it and it falls under something that, you know, could balance out the salary that needs to be paid for a little while, that perhaps that's an approach that someone can take. Because certainly, you know, I think you touched on it, like it's a tough time, and I think that's probably one of the key takeaways from this entire conversation, is to just acknowledge that it's an extraordinary time. It's a challenging time for you know, individuals, businesses, everyone, and trying as much as you can to support you know, the people around you, but, you know, staying mindful of the fact that you as an individual also need support. It's you can't do this alone. I'm like, this is just me, like, you know, talking, giving my opinion on things, but, you know, you need help. These times are just way too challenging. I mean, at least I speak from my lifetime. I haven't seen situations shift so quickly in recent history. So I think we touched on some of the key things. So before we wrap up, Kareem, you know, maybe just like your top 3 or top 4, you know, takeaways or pieces of advice that you'd like to give before we wrap up.
Yeah, no, I agree with you 100%. The resource pooling and sharing, I think, is definitely a good point. Couple of top level takeaways, you know, take a step back, look at the macro picture, identify where you can gain efficiencies, be innovative, you know, look at the team and the resources that you have, think about ways to manipulate that team or resources. And I don't mean with a negative connotation. I mean in a positive way, you know, to be able to, again, be innovative or help as a stopgap in this tough time. I think that's one. Two, over communicate, right? Be super transparent, communicate with your team, communicate with your investors, you know, communicate with other founders and companies. And, you know, the last thing is make sure you have a, you know, like the last point that you said, make sure you have a good support mechanism. You know, I have one. I have somebody that's very, very dear to me that I go to, and that person understands that we're all human beings, you know, and times are tough. And sometimes people get really close to the edge and breaking, and you know, it's normal. You know, again, we're all humans. Everybody has their limits, but make sure that you just surround yourself with people that can support you, and be proactive in offering support as well. I've seen a big influx of people saying, hey, if you ever just need to get on a call and vent, like, I'm here. Like, if you want to feel like you need some human interaction, like, let's do a video call, you know? So,
Yeah.
so I think that's really, really important.
Great. Thank you so much, Kareem, for the wonderful insights. It was a great conversation, and you know, I know that you are part of the Slack, you know, initiative that we've started, and we'll post the link in the chat again. I would encourage all of our attendees to join it. If you have more questions, you know, there's already a lot of people there already. You know, ask questions, and you know, you'd be surprised. People are so willing to help. I mean, we've been getting emails, you know, from mentors, ecosystem players, you know, how they can support startups. So, you know, the support is there, and you know, from our side, we will try to continue, you know, doing webinars, bringing industry, you know, leaders, experts in their field, such as Kareem, you know, to help, you know, guide the conversation. And from my side, I would just, you know, kind of end the discussion with two things. Is, you know, one is transparency and communication. Definitely need to keep that going with everyone. You know, not just your customers, not just your investors, your team, your friends, your family. You know, these are just generally very challenging times. And you know, secondly, I'm you know, big believer in this. Please don't forget to take care of yourself as an individual. If you're feeling overwhelmed, you know, if it's just getting too much, just, you know, grab that friend of yours, you know, family member, whoever it is, get on a call, whatever it is, and make sure, you know, and as individuals, I would say if we could just be a little bit more open to you know, listening to whoever's around us. I think, you know, no one knows what's going to happen. I'm not going to try and predict what's going to happen next. But yeah, I think that's kind of the two key takeaways from my side. Thank you all for you know, joining the webinar. Kareem, special shout out. Thank you for the wonderful insights.
My pleasure.
It was great having you on board. You're available on the Slack channel. That's it from my side. Please keep updated with our all of our social medias for, you know, whatever content or support we're putting out. You'll definitely find it on one of our social media channels.
Great pleasure, Hisham. Thanks so much for having us. Great job, the Sheraa team, on putting these together, and the Slack team. I definitely encourage everybody to join that, and don't underestimate, a small contribution can go a long way for somebody.